Hey everyone, one of my favorite investing skills that I pride myself on is being able to avoid disasters. Coming into 2024, I told investors I was avoiding stocks like Rivian, Lucid, Neo, Fisker, ChargePoint, Plug Power, and Fubo, all of which are down incredibly year to date. But the one stock that I'm truly proud of avoiding is Chegg. Chegg stock is down, not as much as maybe some of those others that I've mentioned, but the company on the surface looked really strong. So to be able to find the reason why the stock price was going to decline was much more difficult with Chegg than it was for some of those other companies that I mentioned, because they were all growth was slowing. They were not generating profits. Their losses were increasing. They were negative cash flow. There were several clues to point you to the direction that these were not going to be good investments in 2024. So let me talk a little bit more about why Chegg is still my top stock to avoid in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned that I highlighted Chegg as my top stock to avoid in 2024. And after the company announced earnings, it's down another big percentage amount. And so far, year to date, it's down 52.64%. Now, of course, there are stocks that are down much more than that, but this one was a particularly difficult one to identify because its prospects looked okay. If you looked at revenue, cash flow, profits, and compared it to its valuation, it looked like a reasonable investment. But if you considered the impact that ChatGPT was having on Chegg's business, and you looked a little bit deeper into the results, you could have identified that Chegg was not going to perform well compared to what ChatGPT was doing. Now, I mentioned that Chegg is down 52.64%, and some of the other companies that I mentioned are down much more than that. Rivian is down 61% for the year, Lucid 40%, Neo 48%, Fisker is down a whopping 96.87%, ChargePoint 43%, Plug Power 48%, Fubo TV 54.87%. And all of these companies I've been adamantly telling investors that I have been avoiding because of their poor prospects. Some of these companies, in fact, most of these companies, are pretty popular with retail investors. Fisker had its own website devoted to investors that were enthusiastic about Fisker stock, and it's down 97%. Fubo TV is another really popular one. Rivian, Lucid, Neo, EV stocks that have been incredibly popular as well. So these were, difficult to identify that they were not going to perform well, but you could see some of the evidence pointing in that direction. The companies were losing money on the bottom line. The growth rates were slowing or declining. Competition was intensifying. The underlying business model was not sound, all of which could point you in the direction that it should be a stock that might be reasonable to avoid. But that wasn't the case with Chegg. In fact, Chegg had done the biggest turnaround I've ever seen for a company. I think in 2020, if I recall, I had rated Chegg as one of my top stocks to buy in 2020. I had it as one of my top stocks to buy. And then in 2024, it became my top stock to avoid. That's how drastic Chegg's turnaround has been. And you can't really blame Chegg for it. I can't really blame Chegg's management team for it. It was just blindsided by the impact of ChatGPT and how it totally disrupted Chegg's business model. It just totally disrupted Chegg's business model. It gave students for free a better version of what Chegg is trying to charge a monthly premium for. If you're not already aware of Chegg's business model, it's for college students primarily, and it helps them with their studies. For instance, if you don't know how to compute derivatives in calculus, you can go on Chegg and ask it a question, and Chegg has subject matter experts that will answer that question for you. As part of your monthly subscription, you get to ask 20 questions that are answered by Chegg's subject matter experts. And then that question and answer becomes available for all of Chegg's other members to learn from. So Chegg had built up a strong database of those question and answers that students can go and learn from, and that helped with their college studies. But now you can just go on ChatGPT and ask the same question and get arguably a better response, because the way you search it up on Chegg is not as clean as you can get the response in ChatGPT. So I started to see the early trends of this, maybe because I'm a professor at a university and I could see students all over campus starting to use ChatGPT and replacing Chegg. I used to, when I would walk around campus, when you go past the computer labs or you go past the library where students are on their laptops, they had Chegg open very frequently, the Chegg website. And in 2024 or late in 2023, I didn't see Chegg anymore. I saw students' computer screens open to ChatGPT instead of Chegg. And I rarely ever see Chegg anymore. It's all ChatGPT. And so I can see that happening early on. And using the service myself, I can see that ChatGPT is a huge threat to Chegg's business, because it offers what Chegg offers, but students can get it for free on ChatGPT versus paying on Chegg. That's the big differentiator, is that ChatGPT is free and Chegg charges $15 to $20 per month. So it's not looking good for Chegg. Now they are trying to respond to this threat. They are making moves to try and strategically respond to this threat by trying to develop a education purpose-built large language model, which they think will be competitive to ChatGPT, because they can offer that large language model at a lower cost, or their cost to search will be lower than ChatGPT. And Chegg is betting on the fact that ChatGPT will not be free forever. And so they're trying to combat that threat. But I don't know how successful they're going to be. It remains to be seen. So Chegg is not highlighting the threat as much as I think it is in existence. They're trying to paint the picture as rosy, as that they're going to respond. They say they're seeing encouraging signs of how their AI enabled platform will serve more students in more ways. And on top of that, the CEO just stepped down and a new CEO was announced, and it's time for Nathan to step in and lead, and I could not be more excited about Chegg's future. So painting a rosy picture, not letting on how concerned they are about how ChatGPT is impacting their business, which companies do. Unfortunately, companies are not very transparent to investors with the threats that they face. And this is one case where I feel I would like Chegg's management to be a little more transparent with investors and the threat that they face, instead of trying to, encourage investors that things are okay, don't panic, we're dealing with it. Total revenues in the most recent quarter fell 7%, and subscribers year over year decreased by 8%. So if you're looking at these numbers, 7% decrease and 8% decrease in the number of subscribers, you're not seeing a scenario of massive exodus or massive declines in usage. But it's happening. It's happening. And you can see that on campuses, and you can see that just by looking at the offering, the customer value proposition. If you look at from a customer's viewpoint, you have a choice. You can use Chegg or you can use ChatGPT. You can see that it's a no-brainer to use ChatGPT. But at the same time, it's going to take time for Chegg to lose these subscribers. Students have these subscriptions, sometimes paid annually, and so it takes time for that annual subscription to expire. Sometimes students have it on a monthly subscription, but they're busy and they're not going to go and cancel this one subscription because they're not using it anymore. How many of you have some subscription service that you're paying for that you haven't canceled, that you haven't been using for a few months, but you haven't canceled it yet because you have a busy life, you have many things going on, you forget that, oh, I got to go and cancel that one subscription that I'm paying for. So That's where I think Chegg is heading. I think more and more customers will cancel and switch to using ChatGPT, although that cancellation might take some time and the revenue decrease might take some time. Still, if you look at Chegg's valuation, is trading at a really cheap forward PE of 4.7, and that's why I say it's harder to identify as a stock to avoid. Because if you look at the revenue and profit and cash flow and the valuation, you might say, "Oh, this is tempting. Uh, is it really gonna? It's not really losing that much business, but the valuation is already down so much. Let me go in there." I don't think that would be wise. I think Chegg is still a stock you want to avoid because I think the customer value proposition has gone against Chegg so significantly that its prospects are not in good shape going forward. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.